And we are here on June 22nd for a Forex trading and cryptocurrency trading market analysis for you. We are going to just show you our disclaimer right now, just to remind you that this is for illustrative and educational purposes only. And remember that we are doing things here where we are live, but there is a little bit of a lag and a little bit of a delay. So, we don't want you trying to copy anything here. So, before we get into this video, please make sure that if you have not done so, subscribe to our YouTube channel, please, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. And also check out the book High Probable Japanese Candlestick Patterns. It's available on Amazon.com in both paperback and Kindle versions. And if you are if you pay for the monthly subscription for Kindles, you don't need to purchase the book. You can just read it on that anytime you want. And also on our website, forex-trading-unlocked.com, we have a whole page that is dedicated to the book. And we also have where you can see little excerpts from it. There's also a video on it as well. All right, with that being said, let's get to our live action screen here. So we have the forex-trading-unlocked.com website pulled up for you. We already have the market analysis tab pulled up. We're going to scroll down past the numbers and all these other little useful things you can use for your analysis. Now, let's take a look at the dollar index first. So the dollar index yesterday settled basically unchanged. And as you can see, the dollar index is wedging right now. It's been basically kind of in an indecisive, divergent kind of trade for the last, I would say, 24 to 72 hours. It basically started on Monday in front of the holiday, and remember that the markets for the most part in the US, they were closed on Monday. So we had a lot of activity though that in some of the Forex markets, and we're going to get to them and show you how that is going on right now. And if you haven't done so, make sure you do hit the like button on YouTube and Twitch where if you're out there, and make sure you share it as well. All right, so let's take a look at what we got going on here. Dixie is going sideways. The dollar's started out a little bit stronger in the early morning session overnight, and then once the U.S. market started to come close to opening and opened, the dollar fell under pressure. So we have a critical support zone here. The main thing is that from 103.54 down to 102.99 here, this is a good retracement zone. You have this upward sloping support line that's helping to keep this trend intact. So that's going to be something that you have to watch. So if we have a really big rally in the Euro US dollar and in the British pound US dollar, as well as say like a sell-off in the US dollar yen, that could drive momentum to the bearish side, where we would be testing this critical support zone. We really need to take out this low here at 103.43 to really start to become at least neutral to bearish in the short run. Remember that we're coming off a higher move high. We've made a higher move low. We haven't confirmed any lower move low or anything like that to set us up to have a different view on what is going on right now. All right, so with that being said, let's take a look at some of these other levels here. So we have the high here of 105.76. Is that going to get challenged anytime soon? Well, with the way things are looking today, not yet. However, we are seeing a nice little dip that has occurred. So, oh, by the way, I want to thank you for those likes on YouTube already. That's really appreciated. All right, because that helps us with the search engines, and even leave some comments if you don't mind also, especially if you watch this later after it's been recorded. And we'll try and answer those questions as well. All right, so once again, if we do see a turnaround in momentum for the US dollar, if we take out 105.76, it's likely that we will probably just go through resistance in a very subtle way. I don't think we're going to blast off. Like, for instance, when we bottomed back here at the end of May, beginning of June, we had this accelerated rally up until a week and a half ago. If we break out to the upside, I think it's going to be a gradual rally, something more like you saw back here in the earlier part of May before we had this correction. I just don't see that we're going to have a really, really big momentum here, because things like oil and the 30-year Treasury bond are starting to retrace right now, so that's going to give the dollar a little bit of resistance. All right, so let's take a look at what's going on in the euro US dollar. So just before we started this webinar, as you can see today, we have pressed higher move highs into our critical resistance zone that we have here. We took out this last high here from last week. Now, is this totally bullish? Absolutely not. Right now, we are viewing this as an upside correction. Remember, the overall trend for this market is lower. Although over the past month and a half, you may say that it is sideways. If you take a look at this downward sloping resistance line, keeping the channel intact, we have not taken that out yet. On the day, we're coming off of the highs. Now, I would say that if this is just a short-term correction, that this is a very good selling area. We're in a sell rally forecast still with this. When it comes to the 30-year Treasury bond and the 10-year notes, we have a little bit of a bounce going on. In fact, if we look at the 30-year right now, we were trading, let's see, we go on the CME website here. And remember, futures are always in a lag. We cannot do this in real time because that's it's not legal, for one. You have to pay for your quotes, and it's only supposed to be for whoever pays for them. So 35.21 is where we are right now. So we're a little bit lower than when I started to get ready for the webinar. So we've made higher move highs on the day, but the Treasury bond market and the 10-year bond market are coming off of lower move lows. So you would still need another really big rally to get another 3 handles, full dollar handles in the bonds above 138.03, and then take out the 138.10 high here. If we were to do that, I would say that short run, the Treasury bond and interest rate markets will be put into a neutral position. Remember, the U.S. Fed has an aggressive raising interest rate policy in place right now. We don't see that ending anytime soon. However, as rates do go down in the market, that adds to bearish pressure for the U.S. dollar. Also, we're looking at oil, crude oil. Let's see where this is now today. Let's see the update for crude. It was down a lot more earlier. See, now it's only down just under $4. It's at 105.69. So it's been rallying basically for the last 2 hours because it had come down to, I think it was 102, something like that. It took out this low, somewhere around there. It was down like $7-8 on the day earlier. So, but now it has bounced back. This is a good support zone right here for crude. I would say that because of, saying all these things in the news about demand, blah, 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 and what have you, and issues with crude as far as we're going into a recession. Well, yeah, this is true. And if people aren't going to be traveling as much, it's because of the price of gas, and they're still going to be doing stuff locally. So I don't see that that's really going to be something we have to think about, so much, where crude has been an issue. As far as this retracement, gasoline futures have not retraced as much as crude. So there's a whole other ball of wax when it comes to the gas thing. So even if crude does stay where it's at, that part of the trade is still bullish for the dollar versus many currencies, especially the yen, which we'll get to. And it's also the euro and the Swiss. Because of the sell-off in crude and the rally in interest rates, I think that's why you've been getting this nice little rally over the past few days to start the week off. Use caution, though. We have now come into this critical resistance zone. So this is trending. Remember, the dollar index was winding its coil. It's going sideways. The euro US dollar, the biggest influence now, is coming into critical resistance. If we fail here, which is most likely to occur because of the downward sloping resistance and the fact that it's a great corrective area because of the Fibonacci sequence of it's through the 50% and barely below the 0.618. So this is a really good corrective stopping block for the euro US dollar. And if that is correct, at the very least, you will see a neutral to lower trade over the next few sessions. Does it mean we're going to take out the lows? Not necessarily. What we would need there is not so much a rally in crude, so much as a big sell-off in the 30-year Treasury bond and the 10-year notes. If that happens, then I think you will be hitting this 103.56 support level here. And if we take out this last swing low, obviously lower move lows in a trending bear market is very indicative of what? Lower pricing being targeted. Do I think the euro US dollar is going to parity? Yes. Do I think it's going to go to parity very soon? That is all up to the U.S. Treasury bond and 10-year note markets. I think that if they start to hit support again and make new lows, it will be a grind lower, and the euro U.S. dollar will probably find some support around 101, 101 even to 101 half, 102 even may even be a stopping zone at first, but I think it's probably going to push it to within a handle of parity, and then get a nice little bounce in neutral trade before we do go below parity. Parity, I think, still is at least a few weeks away. But if we have an aggressive sell-off in the 30-year Treasury bond and also the 10-year notes, meaning rates going higher, that would give dollar strength, especially against currencies such as the euro and the Swiss and the U.S. dollar yen. So, all right, so we see how the euro U.S. dollar now is where it's at. So as far as upside target, unless we take out this 106.12 area, we're going to say that probably right now it is running out of gas in this area here. We're looking for a turn back to support. Okay. Now, if we could break out and settle above this downward sloping resistance line and above the 106.12 pivot area here, then, well, we could see an extended correction up towards this upside corrective zone here, where we go up to $1.0768. 107.88 would be this last swing, lower swing high that's significant as far as the trend. If we pierce this, I can't imagine what would make this happen, except for a monster rally in the bonds and the 10-year note, as well as a huge sell-off in oil and possibly peace talks between the Ukraine and Russia. Good luck with that one. So I just don't see any, but you got to be prepared. If those things do come to fruition somehow, some way, then don't be surprised if you see a rally up there. But I don't believe you have the tools in place to make that rally happen. Anything can happen, well, yeah, obviously, but I don't believe that that's the case. So we're looking for a sell-off now and a test of support. Now, minimally, and this is how you can see if it's just going to be a short-term turn to support. So if we fall below right here, 104.82, this will be our line in the sand. So basically, if we take out the lows of today and trade into that area once again, well, that's very negative. Then I would say that we are going to press support back down towards new move lows, and I would be very cautious buying anything down in this area right here. Not that we couldn't be establishing a bottom and in the bottoming area of a range. Anything's possible. I just think the geopolitical and other fundamental factors are just outweighing the ability for that to happen. All right, British pound, U.S. dollar. And remember, guys, if you got any questions out there, leave them on the in the chat box on YouTube or on Twitch, and we will get to your questions. All right. So I want to thank everyone so far that's thrown up some likes there for us. Hopefully you're sharing the video as well. And if you haven't subscribed, hit that subscribe button on either Twitch or on YouTube. So, all right. So British pound, U.S. dollar. This one, as you can see, it had dollar, like I said, started out strong in the morning. It came back with the bears roaring back and the other currency pairs gaining strength against the dollar. I smell a trap. I think just like how the euro is setting up. See, now the euro is pressing those highs. We are in the pound. We haven't had that kind of volatility. In fact, what we have had is we made this lower swing low. We've made a lower swing high at 124.10. This is critical resistance right here. We have this downward sloping resistance line here, but we have this longer term channel one here, which is still way above that. But if we take out this 124.10 swing high, that would push this upside correction, not change the trend overall, but the short-term upside correction, bullish trend, would be pressing up on this downward sloping resistance line. Sustained trading above here, then we would have the potential to, I guess, touch up around 126.13. We really need to get above there and take out this high in order for us to even become neutral in the medium term for the British pound. I don't think you're going to have a spike up there. It would take a big rally in the interest rate quadrant in the U.S. for that to occur. Well, or there could be something from the Bank of England that comes out. If they were to raise their interest rates significantly that could help propel us up to this area, especially especially if it is in front of our Fed's next meeting when they raise the rates once again. And we know that a 3/4 point expectation is pretty much built into the market already. The question is what is the Fed chairman today and tomorrow going to say in front of Congress as far as the questioning? He became very aggressive after the last meeting, saying, hey, I'm pounding interest rates, get over it, and I'm going to be as aggressive as I need to be every month moving forward. There's no quarter points coming in. The only thing that could really sustain any rally for the interest rate quadrant right now would be if the Fed chairman comes out and says they're not going to say we're going to cut rates, that's for sure. But if they were to say we're going to wait another month or two, watch the economic data, and freeze our raising rate policy for at least a month or two until we get it to see how the numbers are turning out, that could help to fuel a bullish bounce in the bonds, especially because we have a flight to quality rally that's basically going on now that's fueling the correction. So that would also probably set up an exacerbated rally, and then I would say you could see this upside corrective zone also reached by the pound US dollar. Not likely though. Right now we're in a sell rally forecast, especially with the way we are now. I mean, the European markets are closed. We still have quite a few hours left for the U.S. session. I don't think we're going to have too much volatility here in the pound US dollar. And this is another reason why we came off this low. We've made a lower move high. If we came down here, we've been bobbling and making kind of a neutral trade. We haven't really gotten outside of the range of this red bar here, which was on, what was that, Friday? Yeah, that was Friday. So Friday basically set the range. Today we tried to poke lower. We didn't sustain itself, but still we're barely around the midpoint of that range and the body from the previous session that had a bigger range, but we're right in the middle of that. So basically, if you look at it for 5 sessions here, we really haven't really changed price very, very much. It's probably distorted and made a lot of weak shorts and weak longs upset as it's churned around in this little area. So, but I think most likely we're going to start to see it get heavier. Look for a test of support. I would key off of, for sure, today's low and also the high from a few sessions back. Anything inside that range is probably going to be a bear of a trade. Remember this critical resistance level here. I was most likely going to contain it. So, and especially with the way it came back today and now it's barely higher, it doesn't seem to have, it had enough momentum to get us back to this medium point pricing area. And you can see how the bodies of these 2 last trading sessions were also very small bodies. So I think that that's where you're getting a situation where this is a bull trap, and I think the bears are going to make another run at support. And if we start to take out the low from today and start to trend lower and sustain a trade below 121.58 here, then I think this 119.35 area is definitely something that we could see get hit. So we had this buy signal a week and a half ago. We pretty much hit into our short-term target zone. Now we're just kind of chopping around below it. The question is are we going to rally or not? Well, we hit our target, so not that means the market's going to turn, but we don't have any reason to stay long in this one right now, especially because the trend is your friend, and overall we just made money on a corrective trade. All right, let's go to the US dollar Swiss. Interesting trade here. This is another reason why I said you got to watch out with the dollar strength here. Okay. Move this over here. All right, wide range trade obviously here between these 2 pivots here, the last swing high and the last swing low. A lot of support down in this region here. You can see today we tapped down, and again it became a buying opportunity. We did not make a lower move low. This market really wants to, I think, explode back up and make a run for parity. This is a very good buying area here. For compliance sake also, I just want to let you know that we are short the euro US dollar. We are short the pound US dollar, which we just talked about. Yes, that's my positions. Those are actually on right now. US dollar Swiss, I am long this position right now. I'm looking for another rally, maybe not quite as strong as the one that occurred here, but I do believe that we are not only going to just make a little challenge of resistance again. I think we're going to parity, especially with the interest rate environment that we have. So it's a wide range trade under here. Be very cautious, okay? So now look at how I put this up already back at the beginning of the week before the U.S. markets were closed on Monday. This was already done Sunday night. So as the U.S. dollar remains under pressure this week, U.S. dollar Swiss bears are likely to be hunting for lower move lows. Well, we did that. We did it today especially, and now I think that, I mean, I'm not trying to call a bottom, but I'm pretty much sure that we're finding support here, and we're getting ready for another wave higher. Should we fail from 95.46, that's necessary to confirm one, overall longer term lower move lows and a neutral trade. The overall trend of this market long term is a bull, but should we fall through here, that would be after we made this higher move high here, higher move low. We've made a lower move high, so if we take out this 95.46, that would now make it a confirmed lower move low after a lower move high, which puts us into, at the very least, a neutral to lower bias for the U.S. dollar Swiss. Anything between these two pivot points, it's going to get kind of nasty and choppy, but like I said, I am expecting that we start to get another rally here. Now, is it going to be up all this multiple up days straight? I don't know about that, but if you see how we took out all this support in one day, the other major currency crosses did not have this kind of a move back here on the 16th, that was what I think last Thursday. So a little over exacerbated. We've gotten very volatile here, picking the lows, but you can see that this is where we found support before. We are not taking out this 95.46, so I would key off of that and see what we got going on here. And if you look at this, how ironic is it that this support line here is drawn from this low, and this low was held up today. So this is a key little spot here. I would really be mindful of today's low. If you want to be an aggressive bear, I would say if we take out these lows, then you could probably get a nice play and see if it takes out the support here, in which case I think you'll be able to profit on a nice little move. But I would use caution, because if this really is starting to stabilize and find its buying point, we could at least have a day like this. Not necessarily in a row, multiple ones in a day in a row, but just for this market to rally upwards of almost a whole dollar, a whole handle, it's very, very likely. It's very likely, especially considering the volatility in the Swiss has been much more prevalent than it has been in the euro, U.S. dollar, or even the pound. Pound we know is always volatile when it starts to move, but the euro lately has been very contained. So we'll see how this trade goes. As we have any questions about the U.S. dollar or Swiss out here, let's see on Twitch. We do not. Oh, hey, we got Jordan Sims. They started reading your book. It will take time to memorize the patterns. That's all right, man. You know what? Every day is a new adventure in the markets. Every day you try and learn something new. I know I do all the time, and the markets are always evolving. So thank you very much for purchasing the book, Jordan. And you know, while you're watching the videos, if you got any questions, don't be afraid to chime in and ask them, because I'm here for you. Okay, so and yeah, once again, thank you very much for that. We really appreciate that, and leaving that comment as well. It helps with the search engines. All right, so U.S. dollar Swiss. Now let's go on to the U.S. dollar yen. This is another one that, boy, yesterday it was the sleeping rally. I got squeezed on that one. Now I'm reversed. I'm long the U.S. dollar yen. Today took some heat because the market's been under pressure from these highs, and I think right now it's just a short-term little sell-off, if you will, that's been going on today with the rally in the bonds and also the sell-off in oil. That is the fundamentally sets the dollar up for weakness against the Japanese yen. Now, is the crude slide right now going to continue? Are we going to bottom? I think that right now crude is pretty much done with this corrective move to the downside. We could still see lower move lows, but today I think really planted the area where I think we might chop around for the next couple sessions, maybe even the next week in this area. But I wouldn't expect a lot of follow through if we take out the lows in crude, and if anything, it'll just barely go through it and then pop back up. I don't know if necessarily it's the time to get long crude once again, but overall, there's still a lot of fundamentals that have crude going back above 122, 24 area and making a run for 130. Now, another thing going on with the U.S. dollar yen, you got to remember, is that the Japanese had a line in the sand at 131 about protecting their currencies, or excuse me, at 130. We're $6 higher now, and they're not doing anything about it. So they still could come in and do something to intervene and try and protect their currency. But right now, I don't know what they would do, because the things they should do is contrary to what they want to and say that they're going to do, if you will, especially because they're supporting their bond market, so they're stretching it. That's another thing too, is that because we're having a pullback in the bonds, the dollar strength, remember, interest rates are a function of currency pricing. So with the rates going down in the market because the pricing is going up, that's giving a little bit of weakness to the dollar versus the yen and helping the bears play with support, and also the sell-off in oil. However, this trend is still in place, and as much as it wants to, it looks like it wants to sell off. And now fundamentals, at least because of those corrections, are saying, hey, we could see a nice sell-off. It doesn't seem to want to do it. So I'll be mindful of what's going on with the market here. So let's see, let's just say that we did put in a short-term top. Let's go back to our last swing low here, and we'll go right that. So let's see what good old Fibonacci has to say. All right, so here is our, oops, okay, that's right on there. I want to get this though. All right, there we go, and change the color of this one so it's a little bit easier to figure out for what we're talking about. All right, guys, here we go. Now we got it nice. All right, so this is the area I think that if we're just going to have a nice little correction, this is about where it is. If it's only going to be over the next few sessions to a week. One, we have this upward sloping support line maintaining the trend, although it is rather steep. But if you look over at how it's traded over the past few weeks, it's really been just chopping around from 131 up to just above where the new highs are now at 136 something here. 135.66 basically. It capped that before yesterday's session. So short-term correction, if the high is in temporarily, which I would be very mindful. If you're going to sell this market, keep your stops tight, because anything above the highs from yesterday and today pretty much means the bulls are going to continue. It's going to be a grind. It's going to be rough. This is the kind of trend, you're either in for this trend or you're not, and right now you can see, obviously, we've had a lot of volatility. The movement we had from last Wednesday into Friday into this week, where we're at now, this is a lot of market action, guys. It really, really is. It's very impressive. So, but anyhow, our downside area of 134.08 to 133.49, I think this is really the extreme for any corrective move. The only thing I could see that would really hammer this market, where it would start to trend back towards this 130 area where this critical support zone is here, would be if the Bank of Japan does something to defend their currency, which that's something that would, in the short run, have set up the U.S. dollar yen for a big correction. A, because the Japanese haven't done anything like that in a long time, and B, because that would be chipping away against our interest rate variable that's helping to drive this rally, if you will, which is debasing the U.S. dollar, is debasing the yen significantly when it comes to its relationship to the dollar and even other currencies as well. So if we were to get below this 129.83 longer term, this 128.41 to 126.70, but the only thing I could see that would really bring us back, I know it's only been a month and a half since we were down there. However, we still have had a monster sell-off in the interest rate market. So we would really need to press a correction to the upside and reduce rates in order for that to really have a significant chance of happening. And then we would have to see also hand in hand, really, another really big whack in the oil market and get oil like back down to like the 80 something dollar level, at least 90 the bucks a barrel. Could that happen? I hope so. I buy gas just like you guys do. So, but all right. So anyhow, Gary, we got a question here. Hi Ted, could you see the Dixie index going to 120 in the event of some kind of financial crisis in Europe or elsewhere? Absolutely. Very, very good question, Gary. I don't know if any of you watch my segments that I do on tfnn.com. In fact, what I'm going to do right now is I'm going to give you, today I had an excerpt that I can give you from today's episode. We were broadcasting, it's always 8:40 on Wednesdays, Central Standard Time. So for you guys on YouTube, here is the link. We actually talked about some of this stuff. So back to Gary's question. As far as what can the Dixie do? I'm going to pull the chart back up, and I just put those links out there for you. So Dixie, and this is another reason why I think the U.S. dollar yen is most likely going to get its rally as well and go back and make new highs, which if it does, I see it going up to the 140, 150 over the course of the next couple of months. I'm still been net long for a long time. All right, so to answer Gary's question about the dollar index, can it go to 120, especially if there's a financial crisis in Europe, which a financial crisis in Europe is actually brewing. This is not like conspiracy theory stuff or anything like that, but their economy is really, really dragging, and the sanctions on Russia are also sanctions on the EU countries. So Germany is having a lot of problems as far as factory production right now. I would really, really watch the EU numbers, and especially those in Germany, because as those continue to trend lower, it's really going to crush the euro-US dollar trade. And I think right now we're at this last bastion of where it's going very slowly, but when these numbers really start to hit, you're going to see and remember, Gary, this is why we're talking about the euro also. The euro is the biggest component of the dollar index. So let's just say that there's a financial crisis in Europe. We have flight to quality in the dollar. So with all the pairings going down hypothetically against the dollar at that time, we would be well above 105 again. We would be probably pushing 110, if you will. Okay. Now, as far as hitting the 120 area, let's get back to the euro-US dollar. So if the euro-US dollar is the biggest component of the dollar index, which is a fact, we're trading now right here at 105.80. If there was a financial crisis in Europe, that means that the euro is going to be trading below parity. So we wouldn't be trading even at around $1 even. We're going to be trading at probably like 95 cents. So that would be a 10 handle or 10 basis point move in the euro-US dollar. What would that do to the dollar index? That would slam it. That would really, not slam the dollar. It would rally the dollar index. It would slam the other currencies versus the dollar, meaning a very big dollar bull. And especially with a lot of the fact that we don't have any flight to quality anywhere else. So, and if that's the case, if there's a financial crisis in Europe, you're not going to see the U.S. dollar Swiss, which is no longer a flight to quality currency, be there for you. That's going to get hammered as well, meaning adding to fuel to the fire for dollar strength. So yeah, Gary, great question. 120, I think, is a very, very valid longer-term target. I think it is, without a financial crisis, a target to shoot for. I think a financial crisis would just exacerbate how quickly of a move we could get up there. Meaning that if it was to say like happen in the next week or two, that we see really some significant damage to the economies of Europe, especially the whole EU as a whole, completely, and even if it's as the UK as well, then I would say that, yeah, you're going to see these currencies really get devalued versus the dollar. And that, on top of it, also is going to add fuel to the fire to their economic conditions. So, yeah, Gary, really good question about that. If any of you are confused about what we just talked about, what the correlations are with the dollar index or even the treasury bond market or oil, depending on the currency, oil, it's whether you're a producer or have it or don't. So the U.S. dollar yen, since they don't produce oil being higher, that drives, for instance, the dollar stronger versus the yen, or conversely negative. When it comes to interest rates, for those of you that, in case you're wondering why we keep talking about it, and what those trends mean, as rates go up, meaning prices go down, that gives strength to the dollar. And conversely, if rates go down, meaning pricing goes up in the interest rate market, it typically adds bearish strength to the dollar. So it doesn't mean it's going to set the overall trend, but it definitely is going to set a big influence on what it does in the intermediate and longer term. Now, we know that the interest rate policy, once again with the Fed, is aggressively seeking higher rates. So because of that, that is a very big support lifter for the U.S. dollar. Doesn't mean you don't have corrections. Doesn't mean it's going to rally against every single currency cross. Everyone has its nuances. So yeah, great question, Gary. Let's get back to the U.S. dollar yen before we get to the Aussie. All right, so as far as highs, I think it's going to be a grind higher as we breach this area of around 136.69. 140 is my shorter term target, where I think that by mid-July we could reach it, unless we have this extended correction in the oil to the downside or interest rates to the upside, which I don't think is sustainable. And if this really does turn quickly with dollar strength, you can't fight these bulls. I mean, look at how it sold off the other day. This is once again, big volatility from 135 down to 131. It's a $4 move, and went from 131 to 136. It's a $5 move in 5 days. This is without any Japanese bank interventions. This is without any Fed happenings. Well, last week, I'm sorry, that was initially because of the Fed reaction. Now that was over. Now we know that the longer term trend, and especially if the chairman today in front of the Congress as well as tomorrow reinforces his aggressive interest rate policy, then any type of pullback in the dollar or in the interest rate environment is most likely going to be short-lived. All right, so to the downside, we know where our support is here. Very unlikely. However, if we get, once again, really big sell-off in oil, big rally in the bonds, then it's very likely that we would come down to this area and then I think bounce no matter what. I don't see any extended downward pressure on U.S. dollar yen. All right, Australian dollar, U.S. dollar. This thing's been all over the place today. Once again, when the dollar was under pressure, when the dollar was stronger really early this morning, I mean, you can see where the Aussie settled yesterday. It's down in the day still. We had a big sell-off overnight and into the morning session, and now we've come back. For compliance sakes, just to let you know, I am short the Australian dollar, U.S. dollar, and taking just a little bit of heat on it today. But is what it is. I am bearish this for the same reasons pretty much that I've been talking about, is where my stance is on the dollar. So I am looking for lower move lows. After all, we've had a nice upside correction. Since then, we've made a higher move low, a lower move high, and a lower move low. So right now, short run, this thing is looking more weak than positive. Should we get some strength, let's say that today's low is a higher move low after this lower move high here. Let's say we've extended this little pullback correction within the correction, and if we are still going to see a follow through to the upside, we have to have planted it by now. Otherwise, we're going to be making new lows on a weekly basis. So key off of today's low at 68.82 for all you aggressive longs. Looking for a breach of the previous high, which, interestingly enough, besides being a pivot, put this right into a Fibonacci area of 70.70 up to 71.19. If we take out this high, obviously bullish short run. However, I will use cautious. This is a correction, and if it's a correction, this would be a great area to run out of gas, especially if it trends over the next few sessions up into here, hits this downward sloping resistance line, stalls in our critical resistance area, and then starts to fall back on support, especially if we have a big sell-off in the bonds. Big key thing with the interest rates, because everyone's, because of the recession talk and whatever, is starting to say, oh, slow down there, rates aren't going to keep going up like they were, and blah, blah, blah. Well, I think that just because you're coming right off the lows, it doesn't mean, you call a bottom every single time the market makes new lows, you're going to be right at least for a day or two every once in a while, let alone in the long term once or twice. But otherwise, it's just speak. It just creates volatility, gives more of a reason to sell. So we're still in a sell rally forecast. Not very positive on this one, of course, obviously right now, lower on the day, but right in the midpoint of the range, which is also significant. So if we don't take out the high from yesterday, then I would, if you want to be an aggressive bear right now, I would say be short now against this high. If we get above this high, then we're going to probably at least play with this area before we come back on support, or maybe we rally and rally and rally up into the upside target zone up here. But then we'd have to really, we got to, one, settle above this downward sloping resistance line, as well as settle above 71.19 to confirm any extended upside correction into this area. And even still, we could be setting up for this really big sideways trade to really basically trend between where these last lows were here a month and a half ago and a couple weeks ago, and then also this high that was set here in the beginning of June, or maybe even just a little bit higher. So all of a sudden we get this little area where, unlike the euro and what have you, see, this doesn't have the crisis that the EU does. Australia produces their own power. They have oil. They have energy. So in that regards, even though things may be more expensive, they have it, so that they're not under that pressure. So there's different forces at work here. Key off of what does happen in the U.S. interest rate markets, and also the Bank of Australia, what they may be up to, because there's some rumors that they might start pulling the trigger on some types of maneuvers. So when I hear more and know more about what that is, I will get it out to you folks. All right, so real quick, just double checking. Let's see, do we have any questions on Twitch? No, we got a bunch of viewers here. Thank you very much again for, we got another like on YouTube. You guys are very good to me today. I really appreciate it. Helping the search engines out for us. We really appreciate it. All right, so New Zealand dollar. So we got a couple more Forex crosses, then we're going to get to the cryptos. I'm sure some of you are waiting for that one, and we will definitely get to that. All right, New Zealand dollar, US dollar, not quite in the same situation. It's trending like the Aussie dollar, but without as much volatility. And this one, no matter what, I think is under pressure. Even if the dollar starts to wane in strength, New Zealand has issues all onto itself. That its economy is collapsing, its debt levels are skyrocketing. The mandated policies in place where the government has their fingertips in pretty much everyone's daily life now, it's coming to roost. I wouldn't doubt that you're going to see New Zealand. I wouldn't say they're going to go the way of Venezuela, but they could go similarly over the next few years. We'll see what happens over the next couple of quarters, but if they keep pressing the mandates and initiating even further ones that are like the path that they're on, the sovereignty of its citizens is in question. Their banking system also is in jeopardy, and once again, their debt level is not even remotely sustainable for them versus their GDP and what have you, and a couple other economic mumbo-jumbo numbers, if you will. So, but today it reacted pretty much just like the Aussie, but once again, we're coming off a lower move high that we touched into this critical resistance zone already. Now, since we did that, and now we've come back and made this low, the question is we need to key off this low and the high set back a week ago, because that is our pivot point. Do I think we have the ability to break out above this critical resistance zone? Right now, I honestly don't think that it's there. Now, by attrition, we could come above the downward sloping resistance line in a few weeks, but that doesn't necessarily make it bullish. It makes it more sideways. And that could be something also, just like with the Aussie, we may be setting up for a sideways somewhere between these last two significant lows and this last significant swing high. However, unlike the Aussie, where that may take out the last significant swing high, I don't think New Zealand dollar, US dollar has that type of potential to do so. It would really take other markets to fall out of bed for that to happen. You would really have to see, the crude really wouldn't do it. You'd have to see a rally in the Treasury bond market, like they're trading around 135 right now. They'd have to get back up to like 155. They're looking 160 in the eyes. Otherwise, I can't even imagine what would give this market that kind of strength. So use caution and look for rallies to sell. Be very leery of buy signals, except for right now. You can buy basically against a low of 61.94. if you're an aggressive longer-term bull. But if this is set up for sideways, then good luck with that one. You're going to take a little heat, be up a little bit, take a little heat, be up a little bit, be up a little bit, take a little heat, and it's really going to go nowhere. At least, well, okay, anything can happen. I could be totally wrong, but that is the way things are shaping up for now. All right, so now let's look at the U.S. dollar Canada. Talk about a big sideways pain in the butt. This is, big sideways range developing. So this one here we've had, if you look at this, this is a big sideways. I right now, even if there's dollar strength, I don't see it in the U.S. dollar Canada. This whole correlation trade between these two currency pairs is a nightmare and a half for multiple governmental geopolitical reasons. So throw the oil off the trade, and interest rates, even though it's there, I honestly have to say this thing is just, it's a dog. It really is. So right now, look for the downside target zone down to 127.96 to 127.29, especially as other currencies are buffering upside corrections versus the dollar, meaning dollar bearish. So if that momentum stays, then I could see the U.S. dollar Canada definitely following through to the downside and looking to try and get down to this 127.96. 127.29 I think will contain any slide. You can see we've had major bounces off this level here. It's also a failure pivot point, so it's either going to act as support or it's going to really let this market fall out of bed. And I don't think that's going to happen once again unless we have some really aggressive bearish dollar information that comes out in the news. Now I would use caution. Like right now, we had a sell signal too. This is a high probable Japanese candlestick pattern. So getting to Gary, so left us a comment here. Excuse me, Jordan rather. We have a little pattern right here. So we have a little bit of a dark cloud cover that turned into a 2 inside down day. This is a nice little sell pattern. Right now you can see that we're kind of just wiggling and jiggling right now. He gave you another chance to sell where the signal came in on the first day and also on the second one as well. You can see that we're barely up on the day. On a candle basis also, this tells you a lot about today's trading. We've had a huge range. We opened up near the lows, and now we're basically just off them again. I would watch what happens this afternoon. If this thing goes negative, I wouldn't say that we could press a really big slide in this market, but if it takes out the low from yesterday, that's a really good indication that the U.S. dollar Canada is going to continue its momentum to the downside. I wouldn't fight it right now. I wouldn't try and be a buyer unless you have a really valid reason to be a buyer in the U.S. dollar Canada, just because I think you have more risk. You're going to get chopped up, especially if you're a week long. Now, as far as being a seller, I would look to sell rallies right now. Be careful selling it in the hole, just because this thing really, as you can see on most individual days, it's like up, down. The bodies are pretty much contained. The wicks are obviously not. But once it gets into this area, and I think we are kind of in that little kind of a predicament again, that you're going nowhere. So be cautious unless you really are familiar with the U.S. dollar Canada and know that trade. Stay away. All right, cryptocurrencies, boys, all right, and girls out there. So we have 20,154 is where Bitcoin is at right now. What do you know? Woohoo! So I know some people are happy it's coming back. Of course, it's not saying much considering the low was just a few days ago. The overall bear market here is in place. Boy, did we call it back here a couple weeks ago like a bunch of others. Now the question is this rock, has it hit bottom? Are we at rock bottom, or are we still going to fisher through support? Really good question. I think that there's a reality that's sinking in as far as the crypto space that wasn't there before. We had a lot of free money, and that money is now off the table. People need money, and I think they are liquidating a lot of crypto space, especially now because it's been failing in a lot of them, that some people, they can't afford to lose that money, so they're like, hey, I'd rather keep some of it now and worry about missing out on being a Bitcoin billionaire, because the only people right now that are really basically up on the crypto trade are those that ducked out of it over the last year at the highs and stuff like that, or even just a few months ago. If you didn't like selling out of it at 35,000, you like selling out of it now. So now we're at the point where there's so many people that those that have the deep pockets, they're not going to do anything with it. They've either written it off or they're going to wait for a bounce. Is that going to happen? I don't know. I wait for a buy signal. So we don't really have anything going on like that. I mean, we technically did over here. Once again, for our wonderful commentator over here, Jordan, we had a bullish engulfing. Let me get this away from these arrows. Okay, now you can see it. All right, so the body of this was bigger than the body here. This was our bullish engulfing line, short-term buy signal. You know, I'm going to use a different arrow than this one. Let's use an up one because then we could do some other stuff. So this is really good that we had a comment about the book. So I'm not just making plugs, which, by the way, if you want to buy the book, High Probable Japanese Candlestick Pattern, just like Jordan did, it's on Amazon. We would appreciate it. So anyhow, here is our trend line. Let's get this going here. So short term, and this is a nice little 45-degree line, which whether there was a reason to put it there or not, 45 is always a good medium for any gauge of trend, upside or downside. So if we can traverse this trend line and stay above this and maintain it, well, maybe we've solidified a bottom. The reality, though, is I think what you really need to do is get back above this last major swing low, around 25,500, and not just get above it, you got to sustain a trade above it. Then, in that case, I believe that you'll be able to stay at least in this range of 25,000 up to 32,000. Does it have the ability to get above it? Well, obviously, yeah, it does. Is this the next best buying opportunity for Bitcoin? It very well may be. I doubt it, but it could be, you know. So we'll see. Anything can happen. But right now, yeah, we have a short-term buy signal. But so what does that mean? As far as how far can we go? Well, let's just say that in a bearish move that we have going on, in a bearish trend like that exists, that we get a bullish correction. Well, let's change the colors here to yellow. And here's the 50%. So we use our two good corrective area numbers. We get the 50% level and our 0.618. So this little area here is where we are looking for Bitcoin to go to right now. So according per our buy signal, high probable Japanese candlestick pattern, and just the fact that if this is a correction right now, we have a good little target area, even the 50% of 24,882. Not a very big move, considering how much it's been down. However, but it is a nice reprieve from being down at 17,000. If you own it, you're going to probably like it at 25 grand more than 17 grand, right? So, but I don't know how sustainable it is. Once again, this is where we have this last significant swing low. Could be the buffer zone. If this is just an upside correction, this will be a bull trap. Be cautious here. If you are looking here to add to a position, I would not do so, because if this is a bull trap, this is where we will fail, and then the market will come back down and at least make a run for newer move lows. So we'll see how this trade manifests. Any questions out there about Bitcoin from you guys? Let's see. Got the Ethereum up now. Let's see. We got the YouTube, Twitch. No, all right. Well, we're holding the viewers here. I guess you did wait. You guys waited for the crypto, huh? Maybe I should start doing every other. No, that would break the continuity. So, all right. Ethereum not looking as bullish as the other one. However, we did have a bullish engulfing line buy signal that occurred at the same time. So this goes once again to our story of, does the dog wag the tail or does the tail wag the dog? Originally, a year ago, a year and a half ago, I was saying that, and everyone else could obviously see it, that Bitcoin behaved like the dollar index does for the Forex markets. Even though Bitcoin is not an index, let's be clear for anyone that's listening that doesn't know much about cryptos, Bitcoin is not an index. However, it used to behave very similar, meaning that if Bitcoin was trending higher, most of the crypto space was trending higher. When Bitcoin had a sell-off, conversely, you would have the opposite happen. You would have a sell-off in most of the other cryptocurrency space. Not so anymore. There's divergence, and where Bitcoin goes, and especially now that it's so low, is not necessarily where other cryptocurrencies are going to go. Now, it does set the trend a lot in certain capacities for much of the space, and it still has some of the most value too, versus a lot of obviously versus it's still the most expensive crypto asset out there. So interesting to see what's going to happen technology wise and what have you. Ethereum has some more, I would say, positive things going for it than it does with Bitcoin. This one here, I think, is where you get your bang for your buck, because if this one's going to correct, let's see, we're trading now at just over $1,000. And let's just say it comes up into our corrective zone here, somewhere between the 50% and 0.618 mark, and it gets up to 1572. It'd be up $500. So that right there is nearly a 50% gain or potential gain if it gets up to that. Let's go look at the BTC USD again. This one here, we're trading at 20,000 here. If it gets up to 26,000, you're not getting that 50% gain. So your bang for your buck right now, if you think that Bitcoin and Ethereum pretty much trade in tandem, which they do, the one where I think you have your best chance at capitalizing on if a rally happens is not in Bitcoin, but it would be in the Ethereum space. So if you guys got any questions about that, how I figured that out, once again, if you look at the pricing here, where the market is at right now, if it was to get into this area and press the upper extreme at 0.618, you would be making basically a just over 50% return on your money buying Ethereum if it was to travel up into this range. Versus with Bitcoin, if it does travel up into that range, you would not be making just around 50 to just over 50% on your money. You'd be only making more like 35 to 37%. Still a good amount of money, and a great return, most likely, especially in a short amount of time. However, I think this is where your bang for your buck is. This also gets more into the legitimacy of which currencies are valuable and which are not. Technology for Ethereum makes it very attractive. It also, at these pricing levels, it makes it much more attractive as well. And that will be our segue for XMR USD. So, XMR USD, we had a buy signal here as well. Now, this one here has been riding support, but as you can see, this has had a much better swing type of trade. We're not so far below the lows here that we are in Bitcoin. Now, granted, this is a much cheaper digital asset, but on a percentage basis also, this is not hitting lows so much as it is with the other ones. Yes, it's in a bearish trend. Lower move lows, lower move highs. So this is definitely significant. I would key off of yesterday's high for a breakout to the upside. Obviously the low from a few sessions back for new move lows. I think that we're bottoming in this trade here. I would look for, let's see. Let's get this. So we take this high, and we go up that high. Here's our downward sloping resistance line, keeping the trend intact. Okay, so we have, by attrition, we'd have to, by next month or so, we would be able to get out of the downward sloping resistance line of the trend. That would take a big sideways trade to happen to help that make that occur, unless we'd have a big rally and then it collapses once again, and that could happen as well. So, but I think that we're going to have more of a rally here and a breach of resistance because of strength in this cryptocurrency. All right, so let's figure out if it can get above there or not. So if we use the 50%, and then we get the 0.618, all right, so we have our target zone, And if we're going to actually get above or beyond the downward sloping resistance line, it would be somewhere up in this. If it was a rally up into here, this would be a good area, because if we got up to 167.73 here, or excuse me, around 167.73, this is right above where this downward sloping resistance line is. So maybe this contains it, maybe it doesn't. If it was to just spike around here a little bit and then fall back on support, that would be a nice lower move high to trade off of. I think significantly you would need not just a rally above 167.73, but a close above 167.73, just to confirm a run that may take us back up to challenge 210. If we get that type of a rally, I would expect to see some pullbacks, but that would mean that XMR US dollar is no longer in a bearish market, but in a neutral to higher market. But 180 to 240 is fair value, I think, for buying into the range trade that Monero seems to be, where it typically bases down in that area and then it rallies up to no more than 400 something, but usually it's around 370 to 380. So I think you have a good $100+ move to take advantage of in the short run on Monero. Once it breaches that area of 167, right now I would wait more to see what's going on in the crypto space. If those other markets are just in a correction, see, this is where it's kind of the killer. If Bitcoin and Ethereum and combined other digital assets help to drag the market because the whole market as a whole is going lower, if that pressure comes in, well, then I would see us failing up into this area here, or even not even making up there and just basically going sideways for a while. Even if Bitcoin makes new lows, I don't know. It would have to be significant, as well as with the Ethereum, to cause a sell-off here. Obviously, if we were to fall apart now and not make it up towards this area here, which is our critical resistance area, then if support was to give out, that would be bearish as a whole for the crypto sector. All right, let's see if we have any questions on YouTube and Twitch. First time viewer, yo, what's up? Hey, what's up, Stout Iman? Hey, nice to meet you, man. Thanks for leaving a little note there on the chat and hanging out with us as we're talking about now the crypto space. If you guys got any questions about any markets, just put it in the chat and we'll pull up a chart. How's that sound? So as we weave through what's going on in today's trading day. All right, now since we've been looking at this stuff, we have to go. I just can't help but continue to mock the Doge. The Doge. Oh my gosh, look at how this just continues to tank and tank and tank and tank and tank. So did we get a buy signal? I don't know. Is there a buy signal that's actually valid in this market? But let's use this little pivot here. So just above 9 cents, that's our upside breakout level to look for. We did have a, well, no, we didn't. This wasn't a bullish engulfing line. It kind of looks like it, but it wasn't. Didn't absorb the whole bottom of the body. It came off of the lows there. So we don't even have a valid buy signal here. We have a correction in place right now. So let's change from this other line to this one. So I would key off of the trend right now. The short-term, obviously, trend is upwards, but the longer-term trend, without a doubt, is downwards. All right, that's one way of doing it. And now we're going to go from here. It doesn't do anything. All right, so for the doji here, we have a perpetual bear that I don't care if you get the whole crypto space to rally. I don't think you're going to see it occur here, at least not anytime soon. I think you're going to continue to erode. Excuse me, and excuse me. I just do not see any value whatsoever in the Doge here. Doesn't mean that we can't get a pop. The one thing though is Dogecoin doesn't have any real technological value out there. There's nothing sustainable about the technology that is Dogecoin. It's just a run-up, pump-and-dump meme. that has a lot of people that like the logo. So as far as the technology, even those that, I mean, it's like saying that, I mean, okay, they may have vinyl records back and they may be selling them in Walmart too, but they're not selling every album out there. They're selling popular ones, and it's because, yeah, there's plenty of people that love vinyl. Vinyl does still sound the best. But you're not, they don't last, and they're also big and clunky and not portable and all kinds of other things. So it's great for someone with a home studio and someone who loves their music and has a little area in their house that they listen to. But you know, things like that is what a Doge is, and at least with vinyl records, there's a market for that. People really want it. It's sustainable. You can still see vinyl records being around in 200 years from now, just like they still use certain film and stuff like that. You get crispness and depth you just can't get from digital, just how it works. So we don't need to get into that area. But anyhow, so Doge right here, it's a dog. I would use caution here if you were looking to buy this thing. I know people that kept saying, oh, I gotta buy it, I'm gonna buy it, and they're like, oh my gosh, this thing keeps going lower, like, should I buy it now? And I'm like, I don't know. Did you want to buy Enron when it was at 90 versus 110? And then when it was at 50, you're like, oh, this is even better. Did you want to buy it then, or did you? Because we all know what happened to that. Now, is Doge going to go out like Enron and disappear and no longer exist? I don't know about that one. I think it will exist for to some degrees, but I think that before we see even a remote, real, true bottom in this thing, I think it's going to still press below a penny, way below a penny probably, before that happens. I think it'll get to such a fundamentally small amount that it will become maybe even just like sort of a cult trade, if you will. However, it's going to be a very thin and illiquid market, I would expect, if that would occur. So, but anyhow, sorry to be down on the Doge. But all right, so let's see. Do we have any questions on YouTube? No, we got another like, and then on Twitch. All right, cool. You guys are hanging on. All right, so let's see what's going on once again in the market, the major markets here. So we saw what the Canada's a dog. AUD USD. Remember what I told you? I'm short this one right here. It's kind of quiet. It's not really going anywhere. We're in a lunchtime, sleepy summertime trade developing right now. Let's see what the bond market's doing. All right. Oil now, it's only down $4. So it's right around 105.28. So 105.28. So it's a little bit lower than when we started the webinars down there. It's hovering right now. This is key. Oil is just right around this upward sloping support line. If it could settle below that, that would be big today as far as a neutral trade. Not necessarily overly bearish, but I know everybody wants to get bearish oil, and I would use caution with that. That's a trap. Even if oil was to trend lower, even if oil was down, get down to $75, do not expect the pumps to get better, because here's the reality is, if you look at gasoline futures, this is obviously in delay, it's not trending lower like crude is. It is trending lower, but not significantly like crude, and it is bottoming. And also, as of today, if we look at the, let's see, we got the interest rate futures. Let's go back to where gasoline is, and this is key because everyone here buys gas. They don't necessarily buy crude oil. So, but here we go. Our Bob gasoline futures are down slightly at 3.68. So we'll go to 3.68 and show you where it's trading right now. So 3.68. So basically there. So it's near the lows of the trading session. However, as you see, this trend here, they do look very similar. This had a much steeper decline. You went from 124 down to a low of, what is it, 106. And then today we had a low of 102 something, 101 something. So that is, you know, a $23 sell-off there. All right, so that's right there. It was 10, 20. It's a 20% correction that we had, over 20% correction, versus here where we have a high of $4.32 and we're down a buck. Basically $1.50 from there, so that would be a correction of it's near there, but it's just a little bit slight of that one. not quite as strong. And also this one is, if you can see, the trading is more digestive as well versus where crude isn't. And I think that crude can still spike a little bit lower. Gas is probably finding a nice bottom. This all helps when it comes to the trade with the Australian dollar and the US dollar yen as well. All right, so Aussie dollar, we're short this one right here. And right now it is just kind of a quiet, sleepy trade. Let's look at the US dollar Japanese yen. That happen to be long. This one here is floating below the highs. As you can see, it's flirting with the upper part of the range, but also a quiet, sleepy trade here. I think we're going to see another challenge of resistance, but I wouldn't expect an explosive rally. All right, let's see. Any questions on YouTube? All right, we're just doing this little quick lap around here, and then we'll get to something special. All right, so let's look at the US dollar Swiss. All right, we're long this one. Pretty quiet trade. It's not doing very much. Found key support today. Yeah, we're on lunchtime with this one. And let's see, British pound, US dollar. We're short this one. Yeah, this one's just hanging there, just like we were talking. Not doing much activity the last couple of hours, although it has had a nice range today. All right, and Euro US dollar, this was trying to make a run at resistance when we started the webinar, up by the highs, and then it fell back again, and it seems like it's falling asleep right now. So I think everyone's hanging on Fed Chairman's speak, if you will. So since we've been talking about all this stuff, we're going to wrap up. So we saw a couple signals that we mentioned in these charts today. If you go to our products, courses, and services, our whole website's going to be changing soon. We have a newsletter coming out that's going to be launched soon, and a couple other products, which I hope some of you will be interested in. All right, so go to the high probable Japanese candlestick page, and as we slide down here, we have a little bit of a short video here that is also on our YouTube channel, which if you haven't subscribed to, please do so. And then here's what the book looks like as far as the cover. You can preview it. You hit this here, and you can start reading chapter 1. Or you can go, you can preview it, you can share it, so you can, which we would like that if you do that. You hit the little Twitter thing like that, and you say, hey, check out this book, High Probable Japanese Candlestick Patterns. It's sold on Amazon.com, written by Teddy Keckstead, who happens to be me. And then you can also buy it, also here. And this takes you right to the Amazon tab, where you can take care of things. And if you're, there's Kindle Unlimited. We mentioned that earlier. If you have that, you don't need to purchase the book. We prefer that you do, but you can read it there first, see if you like it, and then purchase the book. Yeah, anyhow, things are pretty much slowing down for the rest of the afternoon. We got some nice little signals going. We're going to wrap things up. I want to say thank you guys very much for you guys hanging out for our webinar today. We had a pretty long session, a little over an hour. Usually we try and keep it around just under an hour, around an hour. But you guys had some good questions, some good input. We really appreciate that. It helps with our algorithms. Once again, check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Subscribe to our YouTube channel or subscribe to our Twitch channel. Subscribe to both and pass it on to your friends. Make sure you like our videos. We really appreciate it. I'm Teddy Keckstead from Forex-Trading-Unlocked.com. You guys have a wonderful rest of your trading day, and I don't know about you, UVs. There's a UV warning out there, but I'm ready to go out into the sunlight and get some fresh air. It's not so hot as yesterday. I had to talk to you guys soon. See you guys.